Hello everyone, welcome to Optionsmith. In today's video I'm going to cover a few things. First of all, I wanted to talk about this ongoing strategy that I've been refining. I've been trading for many years, as I've mentioned, and this is a strategy where I'm actually more excited about how it's shaping up than I have been in a long time about a strategy. So first I'll kind of show the results of my recent testing, my forward testing that I'm doing. So I'm testing with low amounts. That to me has been the best way to figure out if a strategy is dependable and you can rely on it for an ongoing basis and really kind of build a big foundation on it. Is I test it forward testing with small amounts, small lot sizes, enough so that it's not really going to bother me what the results are with the money, but you need to see if it actually works in the real live market. Backtesting is a good tool, but I think it's way overrated in the terms of people suddenly just thinking the backtesting shows that this is a strategy that you can depend on. But the real market is way different. Getting fills and just seeing that you can emotionally handle how it performs. So anyway, I'm 14 trades in and I do one trade per day with this strategy where I've refined it down to specific entries and specific strategies based on whether we're bullish or bearish. And it's oddly looking really good right out of the gate. So out of these 14 days, I've got a win rate of 71.4%, which has been kind of shocking because the edge that I found for the direction, which I'll show in a moment, is back tested at about 57%. So I'm expecting that 57% of the days I will end up with a winning trade, and the other 43% will be a losing day. So preparing myself for that is important because that's a lot of losing days. And honestly, I think for traders, you don't really become a real trader until you can handle a bunch of losing days and still be confident in your plan and still know what you're doing and not get emotional about it. And that's hard for 95% of people to do. So I was expecting 43% of the time that I would have a losing day, but I would create math around the strategy so that it would still be a reliably profitable strategy. Well, 71.4% win rate. I've had 6 winning days in a row with this strategy. That can't go on forever. That's got to even out eventually. So I'm kind of preparing myself for that evening out period statistically. But 6 winning days in a row. It's had, the thing I like about it also is I don't have to worry about what the market is really doing based on news or day to day. I'm just looking at it as like a 50-50 trade in the risk reward when I put it on. So for trading psychology, it's really great that way because I'm not worrying about having to get out and avoid a big loss or anything like that, or worrying about, am I going to capture 2 times the risk, 3 times, and trying to squeeze something like that out. It's just very binary in that way. So that's how my results are looking so far. It's almost like a too good to be true, which I don't necessarily like, but yeah, that's where we're at with this strategy. This is how the strategy works. So when the market opens, and this might be a review for some of you, but I think I get asked these questions a lot. So when the market opens, I look at the first 5-minute candle on SPX. And when that candle forms, I create a range. So I create a box here indicating that this is the top and the bottom of this first 5-minute candle. Then I wait for another candle to form that breaks either above or below. that range. So this is what happened yesterday, is the last trading day. We closed below this range. So I went to my visualizer in SPX and I created a bearish broken wing butterfly. Now I look for a broken wing butterfly when I'm bearish, and if I'm bullish for that day, I look for a credit spread, a put credit spread. There's some reasons for that. It's when you're doing a bullish trade and you do a broken wing butterfly, it's really hard to get the risk reward ratio that I go for, because the way puts decrease in value as you get further away from the money is not as drastic as the way calls do. And so for bearish, it works really well for those calls when you're purchasing a further out skip strike call. It's cheaper and it gives you more credit for the trade. So I won't get too detailed about it, but it works better for me that way. And so when I'm bearish, I put on a broken wing butterfly, a call broken wing butterfly, which looks something like this. So I've got my two short calls, my purchased call on this side, and my long call on this side. And this is where there's some finesse in what I'm doing when I'm entering. And a lot of people, especially new traders, they get confused by this because everything's kind of got to be black or white for people when they're first trying to do this kind of thing. But there's some finesse to this where I will move this broken wing butterfly down in price a little bit because I just want the break even to be on the other side of the price, on the higher side of the price. So it ends up being like a 53% probability of profit. Now what happens is usually the mid price for this trade, when I'm looking at it on the visualizer, is it'll usually be around a 230, 220 credit, which would give me a higher max risk. So then I'm actually taking a little bit more risk than what that credit would be, and that credit is what I would earn on what I call the runoff profit. So if the price finishes the day anywhere over here, I just keep the credit for the trade. Now if it finishes or is in this profit tent closer to the end of the day, I can actually get a much bigger profit. But that's usually, to me, just a bonus, and I have some situations where that happens. But I try to base the strategy just on this risk over here and this potential profit over here. And so what I do is I put in an order for 250, a limit order, which gives me a 1-to-1 risk on these sides. So I never have that available at the current price, but I put the order in and I just wait for the market. All it has to do in this case is do a little pullback and it'll usually fill. Now, to me, it's worth it to wait and what I call finesse it to get that fill for a higher credit, because that gives me even more edge. When I have that 50-50 risk reward, that 1-to-1 risk reward, it gives me more edge. And so a lot of traders are not going to have the patience to do this, but that's what separates traders that succeed and traders that fall into the majority. So a pullback like this gave me a fill on this day. There have been times where I don't get a little pullback. It's kind of rare, actually, but it'll keep going down. And if it keeps going down, I will still work it. I want my trade for the day, and I'm fine with then moving the strikes forward even more as the price goes down if it looks like there's just not any way I'm going to get a fill where I'm at. And I will chase the market a little bit in that case because I want my trade for the day. And even at that point, even if it looks like the edge of getting right here where I broke that range, even if that's kind of fizzled a little bit, I'm still okay with a 50-50. And in any place where I'm entering, I consider I at least have somewhere around a 50-50. So I could get in here and I just keep working it if that's happening. The important thing is that I'm working the trade to get my 1-to-1 risk reward, which with a single butterfly, single lot broken wing butterfly, that's 250 on one side and 250 on the other side. So I got in with that trade. I waited it out all day, just being productive at other things and just kind of glancing. And I came into the last hour around here. And you can see I exported my zones for this trade from Optionsmith, and they go on the TradingView chart right here. So that is another feature with Optionsmith, is we have a indicator that you can put on the chart in TradingView, and it shows you, when you import that data, it shows you what your position looks like. So I looked at this chart and I saw that the price was coming up in the last hour, and this is kind of a rule I have with this strategy. There's only an hour left in the trading session, and I'm getting up here, and at that time, let me see if I can make this look more like a wave. This present profit line starts to look more like a wave like this, where it has a slope. I'll go right here. So it has a slope, and that slope starts over here in price, and it moves this way. And so in the last hour, if I'm behind that wave, I'm happy to just ride it and watch and see if the price ends up coming into this profit tent, and then I can finish the trade for a much bigger profit. But if I'm at the front of that wave, I would rather just get out if I can get 80% or more, and usually it's more of the profit, I'd rather get out and not risk the price continuing to go for the next hour or moving fast and getting into my loss area, because that's the difference of taking an almost full win or very easily taking a full loss. And so I could just let it go until the very end and just say let the numbers play out. And but I think for me that's another slight edge that I give myself, and probably contributes to getting the higher win rate without sacrificing much of anything, is because I'll take that profit and not risk going out into the loss area. So that's what I do. If it's getting close in the last hour, that's kind of one of my rules. If it's hanging around this area where it could go into the loss area, then I'll just take the trade off. So the situations where I do end up finishing in the profit tent are if I'm riding from behind the wave coming into the last hour and it just stays behind the wave but it ends up going in here, or if I'm hanging around the loss area already, it's already looking like it could be a loser, I'm sitting at a loss, and then in the last half hour, and this does happen frequently, and it'll just jut back down and finish in the profit tent, in which case it's a very nice flip in the profit for this position. So that's how I handle the bearish side. For the bullish side, it's actually a lot more simple. So if it breaks above this range first at the beginning of the day, I will just look to create a put credit spread, which looks like this. I will move these strikes to get to where I'm close to a 1-to-1. Usually the break even will still be a little bit on the other side of the price. I'm actually looking at a 3-day till expiration just as an example, so it's not going to line up perfectly. But again, I do the same sort of thing where I'm looking for a 1-to-1 risk reward. I'm going to put in the order for a 1-to-1 and just let the market give a little bit of a pullback, which almost always happens, and get a fill. And again, I just have to be patient. And that patience, for me, pays off. So that is more simple also, where there's no profit tent. So I'm just kind of letting this play out. If it looks like I'm really close to the break even in the last hour, I'll get out and I'll be willing to take maybe an 80% of the max profit, just to avoid that kind of, I mean, it's a scenario where, is it worth it to squeeze out that extra $40 for the risk of going to maximum loss of $250? And in the last hour of the day, for me, it's not. So that's a little bit more simple. I'm still just I'm relying on the 57% edge that I have back tested to find that the breakout of the 5-minute range gives me. And also, there is an overall upward drift to the market over time. And so if I'm bullish, I'm also kind of riding that slightly. So I'm just doing this put credit spread for a 1-to-1 risk reward in that situation. So that's my refined strategy. And again, it's playing out way better than I expected. I don't want to sign off on it as the greatest strategy that I've done until I've got 50 trades, so that you can really see the sample size, even things out. But it's been really great. I have no complaints. So you can see how in Optionsmith this just makes it way easier to set up these kinds of trades. And also in Optionsmith, so I was going to talk about something that's been kind of confusing for people. So we have our positions in Optionsmith, and again, we handle positions in a way where if you open a trade in something like SPY, and you do a lot of things over time, like you first buy some stock, and then later on you sell a call over that stock, or you close it out, or you also enter a put credit spread. During all that time, if you've always got some sort of trade open in that ticker, we are treating all of that as one position. And that was one of the bases for creating Optionsmith, is we had no real high-tech way of just by default tracking our ongoing in and out of a ticker over time as a position. Trades would get closed and it would just fall off, and you wouldn't see what your rolling profit is for that. And so that's why we created this default way of handling trading as a position-based system of looking at it. So if I roll puts forward, close one and open another, it will keep track of that ongoing as a position. The only time this position ends is if we're out of everything in that ticker for 20 minutes. Once we've been closed out of everything in it for 20 minutes, we move that position over to our closed positions area. And then after that, if we open another trade in SPY later, that becomes a new position. So some people get a little confused by that and then wonder why we do it. That's why we do it, because trading, oftentimes you're averaging in and averaging out of a ticker, and this is keeping track of everything that you're doing in that time frame. So that's a position in Optionsmith. We also have tagging, which lets you add different text-based tags to your positions, and that makes it easier to search for them later on in the closed positions area that we have, and also in our analytics page. So when I go to analytics, excuse me, and I want to run analysis on, let's say, all the positions that I tagged as like a put selling strategy, or like my SPX strategy, I tag all of those positions as SPX flex. That's what I call it. And then I can easily view data on all of the positions that have that tag. And so you can put multiple tags on a position, and it just makes that whole thing easy to put together in a data set on those different pages, or just find them. And also on the dashboard, there's a filtering where you can only show positions that have that tag, and then you can see the totals reflecting only the positions that have that tag. Now within a position we have grouping. So I can create, and this is how you handle things like, let's say I have multiple iron condors in a ticker, or I have a butterfly and I have a put spread. You can group them together, and so I will create a group called, actually I have a couple credit spreads, so I'll say first credit spread, and then I will create another group. So that shows up right here. I'll create another group called second credit spread. And then one way you can put these trades in is just move them, drag them in. Or you can pre-select them before you create the group, and then just create the group, and they will automatically be in there. And so when you group them in different strategies, in this case, or I've had situations where I have trades under SPY in one account and trades in another account, and then I group them by account. So however, there's flexibility here to do it that way, but this is kind of the main way to group trades, is you group them by strategy. So I've got my two credit spreads here. I've got, and these aren't both actually credit spreads, but this, for an example, if you have two credit spreads, you can see the totals for each of them. You can close them very quickly this way, and this is another thing that has been great for me, because I used to use things like Thinkorswim all the time, and I'd have all these credit spreads, and I'd have to go in and try to pluck out what was that credit spread, because it doesn't keep them together, and then I'd have to search and find them and say, oh, I need to close this credit spread. Where are the options for it in this list of like 30 open option trades? Here I just say I want to close this credit spread. I click close, hit confirm, the order's there. That is a night and day difference compared to what I used to do, so that's another advantage. So we also have, in each group, you can set a group type. And so I can make both of these of type credit spread, and then that can also be used in all of the filtering. So group types get used in the closed page. So if I only want to see trades that are of group type credit spread, then they will show up in the closed position page. This is the one that my example was not closed. So if you had those group types in the in closed positions, then in the closed position page you could set the filter to be credit spread, and it would only show you the positions and the trades that are in groups with the group type credit spread. So let's see. I think that covers it. Oh, I was going to mention, so we are rolling out some more performance features that have faster pages where we're caching where we can. We've added dividends. There's some things we're working on for dividends where if you have dividend reinvesting, Schwab just puts the stock in your account that you got for reinvesting your dividends, and so we need to display that better. But if you're just receiving dividend payments, they show up, and I can show an example of that. So let's see. Yeah, so here you can see all the dividends payments that I received for BND, and they look like that. You get your dollar amount, and they get added to your totals. And that's optional. You can turn that on or off. If you don't want the dividend payments to show up within Optionsmith in your profile, you can just select unselect add dividend payments to position tracking. So that's up to you. We try to be as flexible as we can. So yeah, that's where we're at with Optionsmith. If you want a free trial, just email us at support@optionsmith.com, and we will give you a free 2-week trial. And then at that point, you can decide if you want to subscribe for $9.99 a month. Dirt cheap compared to all the other tools out there. We just want to create a great experience for all traders who want to track trades the way we think trades should be tracked in positions, and to be able to visualize all of their risk profiles easily, and many other things just to make the trading experience that much better. So that's it for today. Thank you.